Hello, how's everyone doing today? Today, I thought we would talk about finances and the home buying process. A quick little background about me. I've been a financial coach for the last 11 years. My wife and I also own a real estate brokerage company, and in addition, we are real estate investors. So this topic is something that you might call near and dear to us. Most people start the home ownership process on the internet or with a real estate agent. Many people, coaches and agents alike, will tell you to start with a lender. This is partly true, but they missed a few steps. The first step is having a functional budget. Having a functional budget will let you know how much you can comfortably afford. The way you do this is by taking your income and figuring out 25 to 28% of that. This is what you'd want to make your house payment. Anything really above 30%, the house consistently becomes difficult to afford. So we want to set it up about 25 to 28%. The second step is having cash. You're going to need an emergency fund. Yes, things will go wrong the day after you close. We'll talk about the option for a home warranty to catch some of that shortly. You're also going to need about 5 to 20% down. You're also going to need earnest money. This is normally about 1% of the sale price. You could call that good faith money. This is money that is paid at the time of the contract acceptance, but is applied to the purchase price. There's also an option fee. This could be any amount, but $100 to $1,000 is normal. This is the amount of money you're willing to forfeit if you walk away during your option period. More on this later. Now, step 3, we're at the lender stage. You're going to want to shop lenders. Think of borrowing money as buying money. This is, in fact, after all, exactly what you're doing. So shop around like you'd shop for a car or a house or anything else. This will most likely be your largest financial transaction, so give it some time and shop around. You can also shop as many lenders as you would like in a 30-day period. As long as the loan is in the same category, it's not going to negatively affect your score. But yes, the other lenders can tell you're shopping. You can pit them against each other if you know what the other ones are offering. Some lenders charge different fees than others. Some charge no fees. There's all sorts of different structures because they're all separate businesses. So shop around and know exactly what you're looking at. What you're looking for from a lender. You want a pre-approval letter, not a pre-qualification letter. The pre-approval means the lender has looked at your items. We're talking bank statements, check stubs, tax history, basically your whole financial life, and they're ready and willing to write you a check. This is what you'll want to provide the seller. The pre-qualification letter basically says, yes, we took a high-level look, and once everything is confirmed, we think we'll write a check. You want more clarification from the lender than we think we'll write a check. After your pre-approval, do not go finance anything. Let me say again, after you get your pre-approval letter, do not change your financial situation. Don't go change jobs. Don't go get a new loan. Don't go buy a bunch of furniture. Don't go get a credit card. Your financial life is on pause until you close on a home. Yes, I'm harping on that a little bit because we've had deals fall through. There's nothing worse than getting 48 hours from the closing table and the lender calls and says, we can't fund this loan because they opened up a new credit card or they went and bought a car or a job change or something like that. During this process, once you get the pre-approval for the next 60 days, 90 days, however long you're looking, your financial life is on pause. After you spend days or weeks or months shopping, and you finally found the house that you want to live in, and you find the house that you want the lender to lend on, you want them to be ready to write the check. This is why I was harping on the pre-approval a minute ago. You get the house, you go through the process, you've done everything you can. The lender needs to be able to write the check, and you don't want them going back and forth with anything because of pre-qualification letter. Start with the pre-approval letter, and you'll save yourself a lot of headaches. These are some of the things you're going to want to ask your lender about. PMI. Well, PMI is private mortgage insurance. This is insurance you pay the lender against your possible default. It's their insurance that you pay for. Some people may tell you this is negotiable. According to all of the lenders we work with, this is incorrect. This is an industry standard. If you put down less than 20%, PMI is not negotiable. PMI is risk-based though. This means the better the loan to value of the property is, the shorter the term of the loan, the lower your debt to income ratio is, are all going to be factors in your PMI. So PMI is designed to go away automatically once the value of your home is worth 20% more than your loan. But you may need to follow up with your bank on this. Some of them don't automatically do it. The nuts and bolts of PMI, private mortgage insurance, is if you put down less than 20%, they're going to charge you something. Just be aware of that. Another item is points. Points is where you can buy down interest up front. This is not normally recommended because it's prepaid interest, but it is an option you can look into and talk about with your lender. PMI is the reason we recommend putting down 20%. As of this video, it's normally running about $75 per month per $100,000 borrowed. Something to consider. Do you really want to spend an extra $75 a month to insure the lender? When talking with a lender about rates, inquire how to get your rates lower. Many factors go into the rate, such as the duration of loan, loan amount, your credit score, your debt to income ratio, and so on. So you're going to want to discuss all of this stuff with your lender. Now we've got the adulting out of the way and we have our pre-approval letter. It's time for the fun part. It's time to start house shopping. Here, you'll want to connect with a real estate agent in your area. In most cases, an agent for the buyers or renters are paid for by the sellers or the landlord. So go get yourself an agent. The seller has one, you should too. Another note on that, at least in Texas, if you don't have a contract with an agent, by default, that agent represents the seller. Something to keep in mind. You'll need to sign what is called an exclusive right to represent with this real estate agent. This means two things. The first one is the most important to you. This creates a fiduciary relationship between you and the agent. This means this agent is required by law to work on your best interest, regardless of anyone else's needs, including their own. If you don't like what is happening and you don't feel like they are doing that, fire your agent quickly and get a better one. There are some great agents out there, but like in every industry, there's also some terrible ones. Number two, this also ensures the agent is paid when the deal closes. Everybody has bills that they need to pay, and this agent is in fact performing work. So yes, sign a contract with them and help them get paid because they did work for you. In addition to getting an agent, you're also going to want to download a couple house hunting apps. You can download realtor.com, Zillow.com. You can check out cleardirectionrealestate.com. There's multiple others, Trillia, and so on and so forth. These are very good things to have on your phone so you can consistently look for things on your own. Your agent will also set you up on what's called an MLS drip. This means once you provide them with the search criteria, any property that shows up on the MLS in your search criteria, given square footage, number of bedrooms, bathrooms, area, garages, carports, that type of stuff, these properties should come to you automatically by email. So this will help you find stuff and stay on track. Be aware, some agents will not show you for sale by owners, commonly referred to in the industry as FSBOs. You will want to talk to your agent about this before you sign a contract with them. Personally, as a buyer, I would never work with anyone that would not show me everything that's on the market that they can gain access to. I said an important thing there, though, that they can gain access to. An important note is not all FSBOs or for sale by owners will work with an agent. So your agent might not be able to set up a showing. Be mindful of that. You want somebody that will at least try to set up showings and give you feedback about what happened. Some for sale by owners, they refuse to pay any agents whatsoever, the buy side or the sell side. And that's just one of the deals in the marketplace. But you want your agent to do everything they can to get you into every single property that is out there for sale. Looking at houses. For each home you see, your agent should provide you a printout detail sheet. While you're at the showing, be sure to take lots of notes. Things you like, things you don't like, small details you'll likely forget. If you walk through an occupied home, it is generally not recommended to take pictures. Keep your camera put away. Also, many will flat out say it is not allowed. Keep in mind, you are walking through somebody's home. It's not an open house. Your notes are really what you need to rely on. When you're outside, feel free to take pictures as long as it doesn't specifically say no pictures on the property, but have the respect and don't take pictures inside. You probably don't want other people walking through photographing your house and your belongings either. The notes are super important because all of the homes are going to start to blend together. You will look at many houses in most cases, and you will not remember the details of the first or second house when you're on house 5 or 6. Remember, take notes. So you finally found the home that you want to put an offer on. Your agent should pull comps to give you an idea of what other homes in the area are currently selling for. Ask your agent to provide you the survey and the seller's disclosure. The seller's disclosure is things that the seller knows about the home that either may need to be done or have already been done in the past. For example, if there was a foundation repair, they're going to have to disclose that. So you want to know this type of thing. While writing the offer, there's many things that the agent will cover with you and you need to be aware of. The first one is, obviously, how much you're going to want to offer. It doesn't need to be at asking. It can be over the asking price or under the asking price. The second one is, if they don't have a survey, who's going to pay for the survey? How many days of the option you'll need. Remember previously I mentioned an option fee of about $100 to $1,000 depending on situations. This is the time that you have to inspect the home. This is your due diligence period. You want to learn as much about the home during this process that you can, so you can decide whether or not this is a good candidate for you. If you're asking the seller to buy you a home warranty, by the way, this is common, and in most cases it's about $300 to $700. You're going to want to know that, and you're going to want to put that into your offer. A word to the wise: do your research. Most of these home warranty companies suck. As you know, because I already told you that we also own a real estate brokerage, so we have a branch that does property management. We have a few landlords under the property management side that use home warranty companies. There's a couple of them that we've, over the years, had really good experience with. There's a lot of them that we've had really bad experiences with. Home warranties can be good. You're going to have a deductible that you have to pay. Let's say, for example, the AC goes out. During that year, you're going to have to pay them a deductible. The ones that our landlords pay is $75 per service call. In most cases, that takes care of everything. But just know you need to do your research on this. You're going to want to avoid certain companies. Do what you can to find the good one. Are you going to ask the seller to cover any of your closing costs? Will you be covering any of the seller's closing costs, such as the title policy? Are you going to allow a leaseback? You might even ask, well, what is a leaseback? Well, a leaseback is where you're allowing the seller to stay in the home on some type of lease situation after you become the owner. A day or two is not uncommon. That basically gives them time to pack up, move out, that type of stuff. We've seen some cases where there's a month leaseback and the seller is literally paying rent to the buyer. Sometimes it's actual cash, but in most cases it's an offset at the closing costs where they just bring more money to the closing table. So you want to figure out, do you want the property the day of your closing to get the keys? Are you okay waiting a little bit of time? Another important note as a sidestep here is don't expect to physically move into your property the day you close. The first step is you're going to have to wait until funding to get the keys. You might close on the property at 10 a.m. and the seller might close at 2 p.m. Well, then they might not fund until, say, 4 p.m. and you might get the keys somewhere between 5 and 6 p.m. Don't bank on spending your first night as a homeowner in the home. Get access to the property, take a look at it, make sure it's in the condition that it was prior to closing at your last walkthrough. And then figure out, do you want to do anything to the house? Do you want to do any painting? Is there anything needed? Anything like that? You're also going to choose a closing date. On this one, be sure to allow a couple hours for closing. It's a lot of paperwork. If you want the seller to leave anything, your agent's going to need to specify that. It is important to note the seller can exclude items. We've had people exclude trees. Yes, people have excluded trees, spotlights mounted on the house, mirrors, and other random things. So a little pro tip here. Most things that are attached to the wall are considered fixtures. Light fixtures, mirrors, sometimes TV mounts and TVs. They can be classified as fixtures. So if you want them to leave stuff behind, washers, dryers, refrigerators, anything like that, make sure that your agent specifically states that you'd like those items left behind. Now that your offer has been submitted over to the seller has 3 options. They can counter your offer, they can reject your offer, or they can accept it as is. Once the seller has accepted your offer, we then enter the option period. This is time for your inspection. It is recommended that you go with the inspector to the inspection. You need to remember though, this is not a full cavity search of the home. Most people say that they thought that the inspection should have been a lot more thorough. This process takes several hours because they check electrical, they'll remove the panel from the electrical, make sure everything's grounded properly, plumbing, PSIs, and that type of stuff. But keep in mind, it is a visual inspection by a trained professional. They're not going to take walls down. They'll use moisture meters to find out, are there wet parts of the wall? They can't specifically say, yes, there is mold, no, there's not. They can say, yes, there's some type of quote unquote growth in that area. They will then recommend you have it checked out by a trained professional. If they see something that could cause structural stuff, they're not going to say there's a structural issue. They're going to recommend a structural engineer. Keep in mind, this is a visual inspection. They are not doing a full cavity search. Next, the home will be appraised by a licensed appraiser based on its condition and the neighborhood. Here's a pro tip. Have a plan in place if the house doesn't appraise. If you submit an offer for $300,000 and it comes back at $290,000, The bank is not going to lend you the 300. You need to have a contingency plan for that $10,000 margin. Are you going to write a check? Are you going to go back and negotiate? How do we work this? Most of the time, a competent seller's agent will also address this to start with. Let's say, for example, the home was listed at 280 and you come in at 300. A competent seller's agent is going to come back and say, what is your buyer's plan in the event that this property does not appraise? They want to know that beforehand. After the inspection period, you'll have an opportunity to go over anything that was found. You're still in your option during this time though. You'll go over your inspection report with your agent. Your agent's going to tell you, these are some of the most pressing items. What are your thoughts on them? And then you guys will have options. You can renegotiate the contract. You can leave everything as is. If you renegotiate the contract, the seller goes back to the first three options. They can then counter your offer. They can reject your offer, or they can accept it. If they accept your offer, once you reach your option period time, 7, 10 days, whatever it is, 5 days, whatever, you will then go under contract. At that point, if you do not close, you can be sued for what's called specific performance. If they don't close, they can be sued for specific performance, at least in Texas. So keep in mind, this is a very serious transaction. You have an option period of whatever times you lay out, and you're paying anywhere from $100 to $1,000 for that option to walk away. Once your option has closed, you can no longer walk away. You're purchasing the property. The next important thing is insurance. Your survey will tell you if this home is in a floodplain and if it requires flood insurance. If at all possible, you're going to want to avoid this type of situation. Flood insurance is typically very expensive, and if you don't have to pay it, you don't want to. A very important note regarding home ownership. Home ownership is great. The average tenant has a net worth of about $5,900 as of this recording. The average homeowner has a net worth of about $196,000 as of this recording. Your home is a huge asset. A lot of people will get different areas about homes being assets or liabilities and all that. And if you want to know more about that, we can connect and go into deeper details on that. But your home is an appreciating asset. So in many cases, it is very beneficial to be a homeowner. However, it's also very important to remember, in the beginning, homeownership is more expensive than renting. Once everything is factored in, you've got closing costs, repairs, maintenance, and all this stuff that most landlords take care of. That is now your responsibility. But once you fast forward about 3 to 5 years, homeownership does turn out to be cheaper than renting. Your property taxes will continue to go up year by year. You need to know that. Most people will tell you, well, I'm fixed at $1,500 a month. You are not fixed at $1,500 a month. Your principal and interest that you pay to the bank is fixed, but your property taxes will continue to change. Your homeowner's rate will continue to change for insurance. So your mortgage will continue to go up. Keep this in the back of your mind. Hey, you guys, this was a fun video to record. I'm extremely passionate about both real estate and finance. So if you have any questions about this, feel free to ask. I hope you guys got some value out of this video and you found it at least informative. If you have questions, either getting ready to buy or how the buying process works, feel free to reach out. You can drop a comment below and I'll try to answer it. You can reach out to me at chris@cleardirectionfinancial.com. You can reach out to heidi.poyer@cdretx.com if you're looking for real estate advice. We're honored to serve. And again, we hope you guys got some kind of value out of this and found it informative. Thank you so much. Bye.